Welcome back. Now, 2025 has been a strong year for global equities, despite bouts of volatility and a very different U.S. policy backdrop. And as we look ahead to 2026, valuations and AI optimism remain elevated, and constructive forces are at play with easing interest rates and lower policy uncertainty. Joining us now to unpack Anchor's outlook for global markets and the thinking behind its 2026 global stock picks is Mike Gresty, fund manager at Anchor Capital. Mike, thanks so much for your time today. And let's start there, right, with your general assessment of markets over 2025. It's been a different kind of year, right? Yes, we started off really strong with those AI stocks powering through, but as we taper off into the end of the year, there are concerns around bubbles, and AI bubble in particular. Over in the US, we started off by seeing, a strong showing from those defense stocks, but as we supposedly near the end of the Ukraine war or peace deal, we are seeing the gains in that sector starting to taper off. And then here at home, we've seen a commodities rally really boosting the JSE.
Yeah, well, good afternoon. I think you've summed it up pretty well. The headline index performances for 2025 are looking like, even though perhaps we are globally starting to see a little bit of a wobble as questions arise around AI, it's certainly looking like we're going to finish the year with very strong gains. But, as we approach the end of the year, certainly that sort of drumbeat of nervousness around AI after such a strong run and increasing questions around whether the companies that are being associated with it are going to deliver the required returns to justify the massive investment. I think as we look towards 2026, that's the biggest question, most investors are asking themselves right now. And I think it's certainly an issue that's going to be tested. And I have to say that even within our team, there's, strong opinions on both sides of that debate, with the strong bulls in favor of the AI story continuing, and in fact arguing that the fact that there is such a debate going on at the moment really means that, some of these risks are to a large degree priced in. But if we focus more on the offshore side, our thinking is if you look beyond AI, there are a lot of positive factors that are actually quite supportive for markets. And, if you look at our stock picks, we are looking for perhaps more of a broadening in performance away from that very tech-driven performance, which has been such a key feature of 2025. So, sort of turning away from the negatives, it's areas like declining interest rates, as you mentioned earlier on, reducing uncertainty. I think the first year of the Trump presidency has been all about disruption and uncertainty and tariffs and so on. We think as we head towards the midterm elections, there's going to be strong incentives for the US government to deliver a strong economy. And as a result, we're anticipating reduced uncertainty, broadening of earnings growth, declining interest rates. And then obviously in the early part of next year, you've also got, tax payouts in the US, which should support the consumer. So there are a number of, while there are risks, we think there are a number of important positives to balance against that.
And it's been really interesting to see how the uncertainty didn't hit markets as much as we expected. For example, the impact on tariffs, even on something like consumer prices, where it was thought to be really damaging, but it's not as bad as we expected, especially as we are also seeing President Trump strike deals with individual countries. Now, I spoke to another analyst earlier this week who said it's a market of individual stocks and not a stock market, which is quite important when it comes to stock picking, right? And I want us to just reflect on the counters that you had picked over 2025 and how they fared this year. What caught my eye in particular were the GLP counters, where you did see a bit of a decline on that front. And I want to know if it's basically on the back of Novo Nordisk. Novo Nordisk in particular has been dealing with tariff concerns as well as, executive and leadership shifts on that front.
Yeah, it was, as I say, reflecting back on 2025, you kind of wish you could have your time over again when it comes to some of your picks. And with that area specifically, we were very divided when we were selecting our stocks for 2025 around Novo Nordisk versus Eli Lilly. So Novo was looking a lot cheaper, Eli Lilly a lot more expensive, but the debate that and the struggle we had was that Eli Lilly even then was appearing like the emerging winner in the space. And, frankly, in retrospect, we should have backed the winner. I think it was a lesson to us. That gap just widened over the course of 2025, and, the stock performance reflected that. So Novo had an awful year, to be honest. And Eli, on the other hand, just accelerated away. So, the lesson for us there in this particular instance was definitely, wherever possible, back the emerging or clear winner. Sometimes, value, as it appeared in Novo, is a bit of a mirage. So a little bit of a lesson learned for us on that one.
Yeah, I mean, you did see gains on the other end, the likes of a Tencent, the likes of an Alphabet, really, really doing well. Let's move over to 2026, right? How you're positioning yourself. You did sort of outline the fundamentals at the top. I mean, we are entering year 4 of that bull market, of course, with heightened fears of a correction. It seems like we are also moving into more easing when it comes to the US Fed. I was looking at the recent inflation print, I think accelerating 2.7%, whereas expectations are for 3%. That, of course, also just boosting that case around interest rate cuts, right? Here at home, optimism is shifting as well. It'll be interesting to see if that is also then rather boost the SA Inc. stocks. So walk me through, I guess, when it comes to stock picking, what are you looking at in particular when it comes to 2026? Are you also applying different strategies when it comes to different regions, different countries?
So I must say that, in terms of the philosophy we follow at Anchor, this is very much a bottom-up approach. So, we start with the stocks and the individual investment cases that each of them has. You made the point earlier on about this being a market of stocks rather than a stock market.
Yes.
That's certainly something that resonates with us. So we didn't really try to overlay a particular strategic view, if I can call it that. It's very much letting the best ideas that we have within our universe emerge, and then perhaps after that, looking at, what perhaps are the underlying themes that may justify why those were the ones that we're most excited about. So, if I could perhaps sum it up, reflecting on, and we'll perhaps talk to the stocks themselves just now, but, reflecting on what it was about them that caused them to sort of percolate up to the top. In many cases, they're almost the anti-AI trades, if I can call it that. These are relative underperformers, to be honest, in several cases in 2025. And they're often companies where the market is quite skeptical about how they are going to fare going forward in a world of increasing use of AI. And we've actually chosen to take the other side of that trade to say that these are actually very strong businesses that we think will benefit from the use of AI rather than be a victim of it. So, that was a clear theme that came through in some of our selections. We've also picked one emerging market stock in the form of New Holdings, which is an area, certainly emerging markets were strong in 2025, and we're expecting that theme to continue as investors perhaps continue to diversify away from what has for a long time felt like the only game going, which has been the US market. So a bit of an emerging market flavor and, backing some of those companies which we think have been unfairly prejudiced or impacted negatively by fears around AI conquering all.
And you're absolutely right. Rotation has been the name of the game this year. And I'm very surprised that you have then chosen Meta. Walk me through the analysis behind that, as we do know that Meta is, of course, spending billions and billions when it comes to investing in AI, and has also been caught up in, the losses we've seen in tech counters over the last month or so.
Yeah, so, certainly within the team, we debated amongst the, can we call them the Magnificent Seven, which was the one that we felt had the best prospects. And one of the things we've learnt with these big platform, highly cash generative, mega cap US tech stocks is when you do have a bit of a pullback, it's often, well, pretty much in every case, historically proved to be an excellent entry point. And we think that investors often miss just how powerful Meta is with 3.5 billion daily active users, an extremely powerful advertising franchise, which we think will benefit massively from AI. So at the moment, the market is very focused on the fact that it has raised debt to fund the enormous investment that it is, or can I call it the bet that it's making on AI? And that talks to that debate I was highlighting earlier on around this huge investment and will it pay off? And certainly Meta, amongst the Magnificent Seven, in recent months has been perhaps the most punished by investors around those fears. And we just think that what's being underappreciated at the moment is just how strong that platform is. So, we saw when Mark Zuckerberg made what in retrospect was probably a wrong move around betting on the metaverse, investors punished the share. He reversed course and it's rebounded very strongly. So, we think we've got another opportunity now in Meta. A year down the track, I think a lot of the skeptics are going to be proved wrong there.
And now to a counter that has been on a lot of asset managers' radar, that being New Holdings, which holds New Bank. And we spoke about, the rotation into emerging markets as well. That seems to be a winner for Anchor within that space.
Yeah, so it's often described as the Capitec of Latin America. So at the moment, its strongest banking presence is in Brazil, but it's busy expanding into Mexico and Colombia as well, and essentially deploying the same playbook. So massive markets at a much earlier stage than certainly Capitec is, and sort of all, if I can call it, all technology. So no branch presence, so a technology-driven bank in a market that we regard from a banking perspective as still relatively uncompetitive. So it is shaking up the market enormously, has over 100 million customers already, and is J-curving at a rapid rate with earnings, growing extremely strongly, and yet, still trades at a relatively affordable multiple of around 20 times. So, for a very high return business growing at the rate it is with so much runway ahead, we think it had a good year this year.
Yeah.
And we expect that to continue.
All right, let's leave it there. Thank you so much, Mike, for taking us through some of the counters that are, catching your attention there over at Anchor, and just walking us through your market expectations for 2026. That was Mike Gresty, fund manager at Anchor Capital.